So I came across this video and the title was quite interesting. I'm just gonna go through it and add my commentary as we go along. So I've never watched it before. I'll be sure to credit the content creator for this. So let's get started.
Bank of England has announced a major shift in regulation of the British banking sector by reducing capital requirements for the first time since before the 2008 financial crisis.
All right, for those of you who don't know, banks have a legal requirement or regulatory requirement to only lend a maximum of the deposit they have in their account. So let's assume they have customer deposit of about £1,000. There was a regulatory requirement that forced them to lend up to a maximum of, assuming, let's say 90%. That capital requirement, I believe, as of today, so if I do a quick Google search, so what is the maximum current reserve requirement for banks? According to Google, it says for major economies like the United States and United Kingdom, the official reserve requirement is effectively zero as of today. So so UK, as it stands, as the gentleman is saying, banks have no minimum requirement to hold any of your funds. So whenever you put money into the bank, they're allowed to lend out up to 100% of that effectively. Obviously, you won't see it because the money doesn't actually move, because the money doesn't actually move, but it creates new currency up to the equivalent of the money you put into the customers put in deposit into the account, and they're able to lend that out. Usually, it is to encourage lending with a view to pump up the economy, stimulate the economy. Let's carry on listening.
And this is a move that's really important because it's designed to free up capacity for the banks to lend more to support economic growth.
Exactly that. So typically they will put into disguise that it is to stimulate the economy and to stimulate growth. But the reality in most cases is that it is the very definition of inflation. Because what they're doing by putting more money into the economy is that they devalue the existing currency, thus increasing the prices for goods and services. But let's carry on listening.
But it's also feeding worries that we could be sowing the seeds of the next financial crisis. And Andrew Bailey, Governor of the Bank of England, explained that whilst the risks to financial stability are increasing, he's confident enough about the strength of the banking system to make this change and free up some of the capital that the banks have to hold.
So let me conclude, risks to financial stability have increased during this year. Although in the UK context, aggregate household and corporate indebtedness remains low, and the UK banking system remains well capitalised.
The government's really enthusiastic about this change by the regulator. And
they are probably right in that it will stimulate the economy, and prices rising is good. For example, if you have a house and the value of your house, you bought it for £100 or 100,000, and if you bought it for 100,000, it's now worth 250. In theory, or you would like to think you're rich, but it's actually the currency that's been devalued rather than your house being worth more. But what is actually very beneficial for if you're homeowner, is that it allows you to pay your mortgage down with cheaper pounds, essentially. So that equity that is stored into by devaluing and creating inflation, by inflating your mortgage away, they allow you to repay your mortgage with cheaper or devalued currency. So that is the benefit. But if you don't have a home, and you will now be forced to buy a house that has been inflated in price with real money, which you've worked and sweat for. So you will have to target that house that is now worth £250,000. Very few people can afford it. That's what is creating the divide between the rich and poor, because the money that gets into the economy goes towards assets that hold value or appreciate in value because of these very measures. So if you are into properties, into stocks, onto the stock market, I'm expecting the stock market to stay up and carry on climbing. Gold, silver, commodities, and Bitcoin, those will carry on climbing and taking up in value. So if you're into any of those over the next few years, months and years, you'll be making money due to this policy. And if you're not, it's going to be very, very hard to catch up. Let's carry on listening.
And I had the chance recently to talk to Lucy Rigby, the City Minister, about her thoughts, and she said that it was great news that regulations were being eased for the banks, as it's been too long that we've been punishing the banks for the mistakes and the collapses that happened in the 2008.
I mean, they're talking about mistakes that happened in 2008. It was criminal what happened. They would lend money to people that could not afford it. So you didn't even need, in some instances, to provide the payslip for them to lend you money. And when things got belly up, because eventually the people that they lend the money to couldn't repay, it created a cascade effect throughout the economy and throughout the world. And the taxpayer had to bail them out. So you and I had to bail them out when they made money from that all along. And when things go wrong, well, you and I have to bail them out. Clearly, that was criminal, in my opinion.
Crisis.
The financial crisis was obviously quite some time ago now, but we need a narrative around banks in this country to be up to date. And I think there's an extent to which, as I said, from a narrative point of view, the banks, we don't want to be any longer on the naughty step, if you see what I mean.
Yeah.
Probably revealing something about my parenting style by saying naughty step.
So for me, there is a sensible recalibration of regulation that's going on in the UK. There will be increased lending. We're already seeing signs of that in the British mortgage market, where banks are lending more to house buyers. But the worry is that under a lot of political pressure from the government and also the international context, where you've got the US under President Donald Trump with a very aggressive deregulation strategy, that the UK could be pushed to go too far and loosen the rules too far on the financial system. And that could lead to future instability and perhaps feed the next market crash.
Yeah. In theory, if you have a business idea, or if you have any kind of project you're trying to develop, this is the right time to do it. This is the right time to go out and borrow money to do it. Capital will be cheap, and you'll be able to borrow, build a business, buy a property, do what it is that you'd like to do. Buy an asset. Most importantly, buy an asset. Something that will keep up with inflation, and something that would appreciate as they print more and more money. So that is the advice at the moment. Is things will start to get way more expensive, whether it be your Uber rides, whether it be your Uber Eats, whether it be your every goods and services that you consume on a day-to-day basis will be more expensive as a result of these policies. But if you do have business acumen and you're trying to build a business, this is also the best time to also be able to borrow to go into that venture. So that's me for today. Don't forget to like and subscribe to the channel. We need more followers, and if you like more videos like this one, I'll see you on the next one.